Good evening. It's Ernie with the Trader of Futures, and this is going to be a new segment that I'm going to do. A new show. And in this show, let's see, I'm going to have to get myself a lower third down here so that I can put a little bit of information. But this show is going to be dedicated to chart reading. Reading your charts. You tell me what you want read, and then I'll do it. I'll provide my own form of technical analysis, probably different than what you're used to. Hi, Michael. Yes, someone stole my identity at some point back in May of last year, and then deleted my channel. But that's an old story. This is a new chapter, and so I'm going to do this, I think, almost, most nights. Maybe develop some kind of regular routine. I think 10 o'clock is probably a good time. Show will probably last, I don't know, half hour to an hour, depending on how I feel and how you feel. But what I'm going to do is, and this is going to be a call-in show too, by the way. I have a number set up, and that's actually down in the description. There is also a place where you can leave messages. You can leave voicemail, and then I'll look at that and decide, depending on your story, if it's good enough, I'll decide whether or not I want to read your chart and figure out exactly what you're looking to do. So in the course of this chart reading, I'll do a technical analysis, in a way, but a very dry technical analysis without really understanding the fundamentals of a particular thing. If I know the fundamentals, then I can probably do it right off of the top of my head. When I say fundamentals, being familiar with the company or the asset, and there are a lot of them that I am familiar with. Stocks, I'm going to probably have to look up, and maybe I could be prepared for something like that. And even for that, I can do a dry, on-the-spot market structure that might give you some clue on how price may behave over the coming days or weeks or months. And so what I need from you is telling me what you would like me to read. Now, behind me, I have Bitcoin. And I do enough of that. I mean, look, if you would like to know more about Bitcoin, I'd be happy to talk about it. So we have our first request, and that is for something called PCAR. Now, before I get into this, one thing that I would hope that you do is don't choose these really obscure penny stocks or something like that, because no one's really interested in that except for you. And I wouldn't in any way put any stock, no pun intended, in a penny stock. All right, but let's take a look at PCAR and see exactly what we're dealing with. Earlier today, I did something on Namaste, or Namaste. PCAR. Pakar Incorporated. I have no idea what PCAR actually is. But let's take a look at it. Let's start by looking up Pakar Inc. and see what it is. So Pakar is they design and sell custom trucks. There you go. Very interesting. They have let's see. So it looks like they build or design trucks for a number of different companies, like Peterbilt or Kentworth. I mean, these are all, and Picard is out of Australia, apparently. So they have a whole bunch of different, they're a multinational company. Very interesting. Let's see, where is Picard? I don't mean where is it, but if I were to put in the symbol, it's on the NASDAQ. Picard is on the NASDAQ. We could probably go to Yahoo Finance and learn a little bit more about Picard. They have a market cap of 20 billion. Does it tell me, you know, what ranking they have on the NASDAQ? I don't know. They seem like, let's see, we need to look at a year chart to get a better sense for the volatility in this company. And they seem fairly stable. Over the past year, they've shown a little bit of weakness. And in particular, let's see, over the last 6 months. All right. And according to research in here, the recommendation is to hold. Analysts apparently believe it is overvalued at the current price, even though it is showing some weakness over the past year. And we have some key technicals. They say that support is at 57.46 and resistance at 67.53. Very interesting. All right, so let's take a look at the chart of Picard. And I always like to start off with what I call this kind of fractal analysis. So I'm going to bring the talking head back on here. So a fractal analysis is where you look at multiple time frames. Start at a very larger time frame and then start delving in to something closer to the present. And as we can see, over the past 10 years or so, or 8 years or so, there's been a lot of volatility in Picard. It looks like they had a high point in early or late 2017, early 2018, and that's when they have seen worser times where they just started to lose value for whatever reason. I don't know what those reasons are. From a volumetric point of view, it looks like the market sees the most value at $64 and now currently at about 56 and change, maybe $57. There's been a pretty big chasm between what happened in late 2018. Let's see, this was right around from September to October. It doesn't look like that was earnings related, so I'm sure that there was some other reason for this. But it's settling into a pattern here, and this pattern that we're seeing here is probably not a very strong pattern. Let's go to a daily chart. We'll zoom in on it a little bit. And we can see that we're starting to get kind of like a range bound or a channel here. And that channel is right about there. So we may expect it to move sideways here for a little bit. Picard shows a fair amount of volatility. As much as 20% over the past 6 months, or 4 or 5 months anyways, after a pretty substantial drop from its high at 72.82, and now it is currently at around $60. So 12, that's about a 15-16% drop. The short-term prognosis, it looks to me like, at least for now, without really understanding anything about Pakar, that it will probably be range bound. This seems to be where, right around the 56 area, and up into the 76 area, as I showed in the bigger long-term chart, are areas of value. So we can go to the 1 week chart again. All right, up here, as I said, 64 and 56. So right now, you see in this big, huge volume well, we dropped through that very quickly. For whatever reason, there is no value between here and here. It hung out up here. This looks like a big head and shoulders pattern that appears to have been broken, the neckline broken. And for a measured move on that, we could expect it to drop as low as 47. I mean, if that's what you believe. Now, this is what looks to me to be a classic head and shoulders. Classic reversal, where you have this trend line here. All right, so we had a nice trend line here. We stayed above. We dropped below it to establish a neckline, and then that trend line then found resistance. This is a classic setup. Then with a what looks like a descending trend line. Now, we just broke through here, came back up, tested above again, broke through again. Now we're back at that trend line here. This is a critical juncture here right now. If it can stay above, then I expect Pakar will probably find solace and hang back out up here in the 70 to 64 area, because that's where it found value recently. If it comes down here, there's a very good chance it could stay down here and probably meet up with this other cluster of trading down here and and then get range bound down here. But right now it's in transition, and we're sitting somewhere in between this low volume well. It's not going to sit there very well. It's going to choose. Hey, do I want to be a $56 stock, or do I want to be a $65 stock? And so that's what appears to be happening right now. If I had to guess, I would say that it is probably going to move back up to the $65 area, because that's where it spent most of its time over the past several years. And I can see that just by looking at the bottom of that volume well right there, and then dividing that out. And you can see that for a good portion of the time over the past 5 years, it has spent most of the time up there. And you can see that just in the volume, that area is much larger than the area down here. So it is trying to come back up. It's going to find a lot of resistance at $61. I don't know what Yahoo Finance was talking about. They were saying resistance at $67. I don't see what the fuck is 67? Where do you get that? That makes no sense at all. We have no idea what Yahoo Finance is talking about. The big resistance really is at 61. $61 to $62. That's the big resistance. If we can't get up above that, it's going to stay down here in this area for a little while. I don't know if that's what you were looking for, Hayseed, but that's what I'm seeing. Richard Wizardry, I am nearby. What software should I start with? Newly. You mean software in terms of charting? I'm using TradingView here. I like TradingView. If you want to get the volume profile, which I think is absolutely essential, then you need to get the minimal subscription price, which I think ends up being about $14 a month. You need volume profile so that you can read the structure of the market. If you want to trade, there are so many different things that you can use. I like Thinkorswim by TD Ameritrade. They have superior options analytical tools. All right, Richard wants to let's see, Newly, and Alex wants to know about Tesla. Live again 3 times in a day. Yep. And let's see, Tesla and KMI. Oh, a trucking buddy talked about Pakar, huh? Okay. Dr. Zayas wants to know about MJ, which is the cannabis ETF. I can just tell you right now that I've been looking at the cannabis ETF for a while, and I still think, and I've been looking at a lot of the companies that are out there, and they're still grossly overvalued. We'll just take a quick look at MJ, just so it's kind of a repeat of what I've done in the past. Now, recently, there has been a move up. Excuse me. So recently, there's been a move up, and I suspect that is because of the new CBD and hemp bill that was passed in Congress. And so, you know, people are assigning maybe a little bit of value to that, thinking that that's going to kind of expand the industry. But right now, none of these companies that are actually involved here are really directly related to the Farm Bill. Most of these companies are growers of recreational or medical weed. So I do not see that this move up is going to have a lot of weight. In fact, I think that we're going to start moving back down to the sub 24 area. And just for okay, so I'm not really showing this chart. This is the little move up that I'm talking about right here. Now, of course, if you've been following this, then you know that I called this top here on the day, and we moved down sharply. Everybody said I was crazy, that it would never go below 30. Then it said never below 28, never below 24. But now one interesting thing about this move up, this is a very strong pattern. Now this pattern, if you look at this very closely, is something called 3 white knights, and it is one of the strongest patterns available of all the candlestick patterns. And so what we're going to do is we're going to take a look at that pattern. The 3 white soldiers candlestick. All right, it's a bullish reversal, 82% of the time. Ranks pretty high. So it's in the top third in terms of performance ranking Frequency rank, it happens, it's in the bottom third. So it's most likely to break upward in this pattern. There is about an 18% chance that it may not break upward. So those are pretty good odds. So I would look at some of the details here on this particular one. Of course, they're showing a three white soldiers here that did not break up. So one thing that you can say about three white candles is that if it does fail on that fourth candle, if we get a short candle on the fourth candle and it does reverse, it will reverse. It often reverses sharply. And just based on fundamentals, I would say that that is a possibility here, that we may get one more candle up. We have a small volume node here. We might hang up here. If we fall back into below 28, then I see us tumbling. It is possible that we may move up a little further. I would say maybe up to 32 before we start consolidating, then move down. But I don't see it moving very fast. And I look at this breakout here as and the three white soldiers that resulted in it. As not really central to the situation of the companies that are represented underneath the MJ ETF. That's my personal opinion. So, Richard, if you would like to give me a call sometime, feel free, and I may be able to give you some preliminary direction. If you're ever interested, I do coaching, and you can find those coaching programs on my website at traderfutures.com. All right, let's take a look at Tesla. Of course, Tesla, everyone's talking about Tesla because Elon Musk, he's the man. Holy crap. Talking about volatility. That is one scary stock. You know, what am I going to say about this? It appears as if we are range bound here over the weekly chart. Let's zoom in a little bit to a daily. Yeah, I mean, this is just one wild ride. I mean, we can squish it a little bit and try to put it into a little bit more less perspective, but here is the perspective. This appears to be a good trading stock right now because we're in a range. Look at this range. Right now, though, we're somewhere in the middle of that range. I mean, if we head up here, I mean, we're going back and forth, creating a nice balance here on the volume profile. It appears that most of the time we want to hang out either a little bit on the upper third or the lower third of this range. For whatever reason, we don't like to hang out in between, and that's exactly where we just moved up. So I would suspect that we're going to probably move up a little higher, at least based on its past performance, and this looks like a good short up here. Michael Jones wants to know about the USD JPY currency pair. That's one of the pairs that we trade quite a bit. on our service, on the artificial intelligence setups, the embodiment. And just the other day, there was a massive, massive drop in the Japanese yen, followed by a huge recovery. Actually, it wasn't in the yen. It wasn't a drop in the yen. It was actually a huge boost in the yen. But because it's on the other side of this pair, it shows as a big drop here. So in other words, if we had the JPY/USD, then this would look like a huge move up and then pullback. So right now we're in this just massive drop here, big huge recovery. I suspect this is a dead cat bounce, and we're probably going to move back down and retrace all this recovery here. We have not followed through in what someone might consider a V bottom. We're starting to come back down, and I expect us to probably continue to move down here. Let's see what we've got. Yeah. And see, now we're in this huge volume well. There's really nothing stopping us until we get down here. There's a little bit of resistance or support at 107. So it's possible we might see a little reprieve there, but it really does look like it's heading back down to this area between 106 and 107. And we'll hang out there for a while. You know, of course, we could, right where we are right now, there's good support here, anywhere in this area, and we could bounce back up. But, you know, based on this massive move, I mean, I haven't seen anything quite like that ever. I mean, the move here was, I believe, the biggest move in a currency, or at least in the yen, in 20 years. So there is something monumental going on here, and so I expect that we're probably most likely going to end up in this rectangle here between 106 and 107.5. Did the massive yen drop show up in the AI alerts? They certainly did. And because we profess to trade small on every trade, virtually nobody was hurt on it, and we stayed with the trade, and it came back, and it ended up being, and we actually saw this in the Aussie dollar, and the Aussie dollar was affected in a similar way. And we stayed with that trade and ended up making quite a bit off of that. Let's see if I can show that. Do I have it up? No, I don't have it up. Oh, we'll take a look at it right here. So we had a trade right here that it came down, this blue line right here. Well, let's see, am I showing that correctly? Can you see that? Up top, this top third in the middle. I'll drop it down a little bit further so that we can see that a little bit better. So here are the setups. So this, there were two setups here. This trade was obviously a loser, but this one was a big winner. And most people would have stayed with this trade because it would still be in effect 1, 2, 3, 4 more days. So I suppose if you missed this trade, you'd be in this trade. So anyways, this trade here is we would come down to that blue line and take a long. Now, as we were one day into this trade, it dropped dramatically and then reversed, and then ended up being a winner. And then we had another call to go short on it based on that pattern. I don't know how many people actually went short, but if they did take that that short right there, they would be in a loss, or they would have lost the gain that they made there. So I would that's what I would suspect. As far as I know, that most people that were in the room, there was only a couple of people that actually took this extra trade here. It's unusual that we have another trade while we're, that is talking about going in the opposite direction while we're already in that trade. So typically what would happen in a case like that is people would take the first trade and ignore the second trade. Now some people may have decided to get into that trade, especially after that huge drop in recovery, and they made profit. So that's possible. I know that I got out of the trade and then just stopped right there, and I didn't go short. All right, so let's take a look at some of these others. Did the massive yen drop? And Adam says the USD Canadian dollar was also a nice short. Yep, that was another trade that we put on. But that was last week. Today we did have that as a call, but it never triggered, so we never got into that trade, and that was a long. And if you're referring to previous, let's see. Yeah, we didn't have a short on the Canada dollar. Let's see. Do I know what caused the pullback? I think it was China releasing some very poor PMI numbers. Their manufacturing index was looking particularly poor. And I think that had something to do with it. There may have been other, but I don't know the full extent of it. Michael Jones wants to know about gold. We did have a trade on, well, we did have a signal on gold, but it never reached. So here it is at the bottom middle. You can see if it were to come down to that cyan line, we would have called it long. And it certainly did go long. That would have been a nice trade had it come down just a little bit further. So what is my prognosis on gold? Let's take a look. I'll look at GC, the futures, and then if you want to look at GLD, the ETF, that's fine too. All right. So this is a daily chart on gold. You can see that I have a lot of lines drawn here. All these lines are picking off support and resistance and value nodes. And so what I'm saying here is that there's heavy-duty resistance here at 1304. I expect that we're going to find it tough to get through that. But if we do get through that, then I would say that the next level to look at would be 1330 or 1329, 1330. And then join up into this volume node. If it gets rejected, then I'd say that it would hang out again back here between 1274 and 1295. All right. Oh, this was fun. Half an hour of just throwing out some different things here. Now you notice that I'm not using RSI or stochastic or MACD looking for momentum or overbought, oversold. None of that has shown to have any kind of statistical relevance. I mean, I've been a systems trader, an automated trader for many years, and I've looked at strategies involving RSI and MACD and all the different indicators, and none of them actually hold any kind of edge to them if you were to trade the overbought, oversold paradigm. And so that's why I don't use it. To me, it's useless. I mean, you can pretty much tell whether or not something has momentum. I mean, if something's moving up and strongly trending, it's probably going to continue to trend. As a general rule, I would say, look, gold is trending up. Anytime it has a pullback, it's probably a good opportunity to go long. When we get up to this 1304 area, if we pull back and then try it again, anytime we pull back to any of these areas here below that that solid resistance line, I would say go long and look at maybe taking a little off once we hit that resistance line. And if we go through, you know, hold on to what you have left and look for it to run higher. You know, that's based on that trend. Until that trend does something different, I would say that you trade that trend. Right now, gold looks like it wants to come up. Now, we may find that it's going to hit a roadblock here, especially with the Fed announcement today. And you know, silver is basically the same story. I mean, they parallel each other very nicely. Adam says, I do like the TTM squeeze as the only other indicator. Now, the TTM squeeze is actually a confluence of indicators. There is the squeeze part, which is actually the Bollinger-Keltner squeeze. That is an interference between the Bollinger Band and the Keltner Band. And where it interferes, it's trying to identify areas of consolidation. It's a volatility constriction area. The idea here is that after volatility constricts for a period of time, it will then expand. The problem is that the TTM squeeze cannot effectively tell you what direction it's going to expand to, either up or down. For that reason, they overlay onto that a linear regression slope. Now, let's see, I can probably bring up one of those here. As you know, as you can tell, I know a lot about that that indicator. All right, there's the TTM squeeze. So the different parts to this indicator are the oscillator, which is the linear regression slope, which is a kind of a momentum indicator. And then the bar at the zero line, you'll see that it is green, then red, then green, then red. Where it's red, that's the squeeze. That's where you're getting a squeeze between the Bollinger and the Keltner. And the idea here is that right after, when it turns green again, there's likely to be a volatility breakout. And so you can see that if we look straight up here, we're squeezed right here, and then you have a volatility breakout to the downside. So generally what people will say is that if the linear regression slope is crossing the zero line to the downside after a squeeze, then you take a short. So the idea here is that you would take a short. Let's see. Let me show you the chart. So I'm going to take a look at this area right here. Down below is the TTM squeeze. We don't need this. Let's get rid of this volume chart. It's just in the way. So this is how you use the TTM squeeze. On the bottom, you see the oscillator. This is a linear regression slope. Basically gives you momentum, direction, and I guess strength of that momentum. The green line, it's green and red. Where it's red, that's where there's a squeeze. That means that if you had a Bollinger Band and a Keltner Band on this at the same time, where it's red, that's where the Bollinger and the Keltner are interfering. They're saying that there's low area volatility in this area right here between, I don't know, October or November 9th, or November 9th of 2017 and December 5th. And then the squeeze stops. When the squeeze stops, That means that there's likely to be a breakout or breakdown. The idea here is to take a look at the slope and see what direction. If it's crossing the zero line going down, then you would take a short. If it's crossing going up, then you would take a long. In this case, you would take a short, and that would have been an effective trade if you could have caught it. The problem is that, this all looks well and good, but when you're, and this is all good theory, but in practice, it doesn't work out so well. And if you try to codify this and turn it into a strategy, it's not a very good strategy. It doesn't produce a lot of good results. And that's one of the problems with squeezes or indicators like this. They look so good when you're looking at them from a discretionary point of view, but when you actually put them in practice and try to follow the rules, they very rarely give you the type of results that you're expecting. So here's another one. Here's another squeeze. Here's a good example of that. All right. Here we have a squeeze. Let's see. Actually, see, we say we go down. So we only go down a little bit, and then we stop. Then it reverses. So how would you know to reverse? You wouldn't. You would have made small gains, but you wouldn't know where to get out. All right, so we can take a look at another one here. Here's a squeeze. Well, here's a squeeze over here, a more pronounced one. Over here from September 13th to September 28th. And again, it's showing the linear regression crossing to the downside, and there's really nowhere to go. There's just a small little gain, and then it pops back up. So in general, I would say the TTM squeeze is not an effective indicator of both breakout and direction. Ernie, how bullish is silver? All right, we'll take a look at silver. I mean, when you say how bullish it is, we're certainly on a nice uptrend after a nice long base. And so there's a lot of argument that can be made that we'll probably rejoin this area of high value in the $16.50 to $17 range. But we have a big chasm here to move through, and we're in uncharted territory here. It's got the momentum. I think that it will reach up here, that we are going to see $16.50 silver soon. I don't think, I have no reason to believe that it will go beyond that. Netflix is on back on a solid rise. Suf Lao says, I do it my way, which I really don't know what that means. And Michael wants to know about oil. Are we still in the short? Not that I know of. I'm pretty sure that the AI mentor got us out of that trade. That would have been over here. Yeah, I would probably say, let's see, that's a 4-hour, that was a short-term trade. Was that a trade in the room? I thought that there was a long and a short. Was there a short as well? But that was a short-term trade, so I really don't know. I didn't personally, and I was not involved in that trade, so I don't know. And so Hayseed wants to know, fundamentally, am I still long-term bullish on U.S. stocks? Yes, there hasn't been anything that has happened in the stock market that would pull me off of that, even if we were to go down massively here. Long-term, yes, I believe that we're still just on the precipice of a massive breakout of equities versus bonds after a 17-year-long consolidation. I don't think that there's any doubt in my mind that for the long term, maybe the next 10, 20 years, that we're going to be on a bullish run. Adam, tell us about chart gaps and what they could mean for a trend. And a lot of people talk about filling gaps. All right, so here's the scoop on gaps. There is no doubt that about 98% of the time that gaps get filled. Now, the question is, are they getting filled because the market says, hey, we got to fill that gap, or are they getting filled simply out of volatility and price action? I think that they're getting filled simply out of the fact that there's volatility in the market and moves up and down, and eventually it's going to fill a gap. Sometimes you'll see multiple gaps in trends, and is it a good indication? It's hard to tell because it depends on what asset type that you're talking about. The only time that it's possible to see gaps, say for instance in a futures product, is over a weekend when you have some downtime. In a stock, obviously, you can see a gap form almost every night, every day, because there's a big difference between in time from the time it closes the previous day to the time it opens the next day. With futures, it's continuous, except for on the weekend, so that's usually the only time that you see a gap. And sometimes that gap can be substantial because a lot of times it seems that big news a lot of times waits for the weekend. So this whole idea that a gap must be filled and that you should be trading that gap, I think is missing the forest through the trees, because you don't know when it's going to fill. Now, if it fills almost immediately, it may appear as if it is, and the level where it jumped from to the level where it resulted in may or may not have some significance in terms of volume profile. I'd be more interested in the volume profile. I've done millions of gap studies, and I have yet to find and all kinds of different variations of it, measuring the move, everything about it. And I have yet to find any consistent way to say that how to trade a gap. I will say this, that they will all eventually get filled. A lot of times it'll come back and get filled and then fill it right to the very edge of where the gap began too. And that's not unusual. It's not necessarily the gap. It has more to do with the volume profile and where investors have found value and not value. And that's what I would put more emphasis on that than the actual gap. KMI. I don't know what KMI is. Let's find out what KMI is. Kinder Morgan. It's on the NYSE. $39 billion cap. Over the past year, pretty stable. Currently rated a buy. And at least according to Trading Central, it is overvalued. So why is it rated a buy? Well, let's go to the chart. Check it out. What does Kinder Morgan do, by the way? They're an oil and gas stock. So with oil on the rise, they're probably benefiting from that rise. Kinder Morgan, I mean, this might be an effective stock to actually do an arbitrage between the stock and also oil futures or an oil ETF. So they're a pretty big player. They're overvalued. Analysts, by and large, are giving them a buy to a strong buy. There has been upgrades and downgrades are kind of a mixed bag. It's probably a good stock, I mean, if they pay dividends, to kind of hold on and maybe collect those dividends. And all right, let's take a look at the chart. Yeah, so you can see that it looks like it's very closely correlated. You got to show it. Looks like it's very closely correlated with oil. So we had this nice move down on oil, and then recently this move up. But it looks like it's over-exaggerated compared to oil. So there might be a good arbitrage opportunity there. But according to the volume profile, we're going to see a lot of resistance up here in the $18 area. Even right where it is, there's a fair amount of resistance. We have a low volume well, but it's not a very well-defined one. So we could easily move up and down here. I see the big resistance being above here. You know, 18 to 1830. Looks like over the life of this, it wants to stay somewhere between 15 and 19. Are there any AI signals tonight? Are there any AI signals tonight? That's a good question. Let me check. Not yet. And that's a hard one for me to predict too, Chris. So that's up to the AI mentor. I know that he was, you know, he had family stuff and also some technical difficulties that have kind of moved things around a little bit. So they may be coming out late. So you get all of this for $14.95 in TradingView. I am sold. Well, the $14.95, the big thing is the volume profile, because there are very few platforms that have a really good volume profile tool, and I put a lot of weight and emphasis on volume profile. As a matter of fact, it's really the only indicator that I use. It's not even an indicator. It is actually shows you where supply and demand and the structure of the market is. Bonds 10-to-1 to stocks, but can't that bond bunny decide to go into stocks? Instead, it could go into EM. I don't see any big moves happening on the immediate horizon there, Hayseed. All right. Well, this was fun. Hour into it, that's all I want to spend. I'm gonna refine this show a little bit and make it a little bit more structured. I want to spend a little bit more time and maybe do 2 or 3, maybe 4 stocks or assets in a show, and possibly have a call-in. That would be nice too. So I want to thank everybody for showing up, and we'll do this again. I just don't know when. I want to kind of refine this, put a little more graphic work into it, and get the audience participation up a little bit, something a little bit more firm, and maybe even bring on some guests. That would be nice. All right, now it's time to go. I hope everybody has a good night, and thank you for showing up. Hit that like button. I appreciate it. Am I looking to go long ES at all? Oh yeah, I'm still long the ES. That hasn't made the move yet. You're welcome. Take care.